What's up, everyone? Welcome back to the channel. Things in the markets are absolutely wild right now. We're seeing stocks at all-time highs, Bitcoin's hitting record levels. It feels like everything's going up, up, up. But if you've been paying attention to the news, you know there's something huge brewing that's not about the Fed, Elon, or even Donald Trump winning an election. I'm talking about something that could potentially reshape the entire global financial system. We're talking about a new world currency. And this all stems from the recent Brics summit that just wrapped up in Kazan, Russia. Now, Brics is this alliance of countries, and we're talking about Brazil, Russia, India, China, South Africa, and now a bunch of new additions. These countries combined, they actually have a bigger GDP than the entire G7. But the big news is this. Brics is not just a group of countries anymore. They're launching their own payment system called Brics Pay, and it's designed to challenge the US dollar's dominance. Now the dollar is actually holding strong, and Russia is even suggesting they might not ditch it now that Trump is back. So yeah, things are about to get very interesting. In today's video, we're diving deep into what was discussed at the Brics Summit. I'll explain how this could impact your investments. First things first, let's understand how we even got to this point where Brics represents a huge chunk of the world. 34% of the Earth's area, 36.7% of the world's GDP, 41.5% of exports, over 45% of the population, close to 40% of industrial production, and over 40% of the world's wheat harvest. To understand that, we have to rewind to the 1930s. Back then, the U.S. was in the Great Depression. It was a bad time. But World War II came, the U.S. started producing war materials, and the economy got a massive boost that ended the Depression. This made the U.S. an economic powerhouse, and the dollar became the currency of choice for global trade. Then, in 1944, the U.S. used its newfound strength to make the dollar the world's reserve currency at a conference called Bretton Woods. Most countries were on board since their economies weren't flourishing at the time and started tying their currencies to the U.S. dollar. In the 1970s, President Nixon removed the dollar from the gold standard, starting the era of fiat currency and, in a way, starting a slow decline of the U.S. dollar's prominence. But what really drove countries to seek alternatives wasn't the removal from the gold standard. Instead, it was things like global conflicts, sanctions, and the weaponization of the dollar. Many countries now see the dollar as a limit to their growth, which is why they're creating their own financial systems outside the U.S. That leads us to the Brics meetings, and the recent one held in Russia was very significant. Arguably the biggest announcement? Brics Pay, an alternative payment system that completely bypasses the U.S. dollar. And the backstory of how it might have been created is wild. It involves a project called Project EMBridge, led by Switzerland and other partner banks. In 2019, they started working on central bank digital currencies, CBDCs, a global payment system to compete with crypto. By 2021, they reached the minimum viable product phase and were able to move billions of dollars around instantly for almost nothing, a huge success. But suddenly, something ago, the Bank of International Settlements, BIS, backed out of the project. Why? Rumor has it, it's because countries like China, the United Arab Emirates, and Iran, who all became new members of the Brics Alliance, were involved with the project. The fear is that they could take this tech and use it to create their own payment system, which, lo and behold, Brics Pay was announced. So Brics Pay is basically like Apple Pay, but for institutions that want to move money, and it uses decentralized technology and QR codes. At the summit, they even handed out physical cards loaded with 500 rubles as a symbolic way to show what's coming next. Their goal by the end of 2024 is to be fully independent of Western payment systems, which would significantly reduce their dependence on the U.S. dollar. Brics just had a meeting, and guess what? They welcomed 4 new members: Egypt, Ethiopia, Iran, and the United Arab Emirates. Each of these countries brings its own unique flavor to the table, with their own strengths and resources. This expansion gives Brics a more solid foothold in Africa, the Middle East, and Asia. But that's not all. They also made a big promise to beef up the new development bank. This bank is like a lender for developing countries, but with a twist. They want to give out at least 30% of their loans in the local currencies of the countries they're helping. Now, why is that a big deal? Well, it's a direct shot at the International Monetary Fund, or the IMF. See, the IMF is like the world's central bank, lending money to developing countries, but often with strings attached, policies that usually benefit the West. The Brics Bank is promising loans with no Western strings, making it much more attractive to countries that want to do things their own way and distance themselves from U.S. influence. They'll be offering loans in currencies other than the U.S. dollar. This makes repayment easier for developing nations. Okay, so why is Brics doing all this? It's not just about being nice guys. It's about building their own resilience, fighting back against things like U.S. sanctions, which have been especially tough on countries like Russia. The real goal here is to challenge the U.S. dollar's dominance. The U.S. dollar has been the world's reserve currency for decades. That means everyone uses it for global trade. And let me tell you, that status has been a huge advantage for the U.S. economy and its investors. If Brics succeeds, that could change. Big time. So what does all this mean for you? How could it affect your stocks, your Bitcoin, your real estate? Well, investors hate uncertainty, and a rival financial group like Brics is going to create a whole lot of it. We're talking about Brics potentially creating their own trading systems outside of Wall Street's influence. They could have a Brics-backed commodities exchange. If that gets traction, oil and grain prices might start shifting. We could see the U.S. lose influence over global commodity prices, kind of like what OPEC did with oil, but on a bigger scale, across multiple industries. It's not just about the countries currently in Brics either. Countries like Turkey and Saudi Arabia and dozens of others are reportedly interested in joining. Why wouldn't they be? For countries that want more independence from the West, Brics offers a very attractive path. If this alternative takes off, we might see the dollar used less and less in international trade, which could mean that if we keep printing more dollars as a means to pay debt, that will make the U.S. dollar weaker and more dollars will stay in the U.S., which in turn will potentially lead to more inflation. Okay, let's talk investments. Is there any asset class that doesn't go up or down for the same reasons as everything else? I'm talking about something that holds its value internationally, something that tends to go up in price over time. Well, UBS did this study that said over 85% of wealthy people they asked felt that art was a safer investment than stocks. The art market itself is also growing like crazy internationally, especially for the ultra-rich in China. So, how do you get in on that without needing millions? Well, that's where Masterworks comes in. Masterworks delivered some fantastic returns to their investors. If you're interested in diversifying your portfolio with art, check them out. Okay, let's talk about Bitcoin. Now, there are a lot of reasons why Bitcoin could go up in price. But here's my favorite way to think about it. Now, you might look at Bitcoin's current price and think, oh, it's too late to buy. But on this scale, Bitcoin is just pennies, like 17 cents of our $100 world. I believe that we will see a reshuffling of these assets in this deck of cards. Bitcoin might have more share of that $100 in the future. It's not a perfect system, but this is the way I see it, and it's why I'm invested in Bitcoin. Let's just imagine this. We see a little shift in the financial landscape. Maybe $10 flows out of real estate and into Bitcoin. Then $4 comes from stocks, finding its way to crypto. And just 60 cents from gold makes the leap. Not huge amounts, right? Just a gradual trickle from these huge asset classes. Now fast forward to 2045, 20 years from now. Let's picture this world. The global wealth is now at a staggering $4,000 trillion. That's 4 times bigger than it is today. And even at that scale, Bitcoin is still relatively small compared to everything else, just like today. But now, it's visible on this huge scale because on a $100 basis, Bitcoin is now worth $7. Okay, what does this mean for Bitcoin's price? We're talking over $13 million per coin. Over 20 years, that's an average annual return of roughly 28%. Or a KAGR, if you want to get geeky. Is a 28% return completely out of the realm of possibility given what Bitcoin has done since its creation? No. I know what you're thinking. Is this all just a crazy dream? Could I be totally wrong, looking foolish in 20 years? Absolutely. But really what I think I am doing here is going on the record and not really saying anything different from some much smarter people. But hopefully, the core message lands for you. Here's the thing. Bitcoin's value going up isn't about some people hyping it up. It's fundamentally dependent on a reshuffling of money on a global scale, a shift of cents, dollars, and euros. Plus, we're talking about new players too. We are seeing states, major players like BlackRock, banks, sovereign countries, and pension funds starting to take notice. They may not be so attached to older assets like bonds, gold, or even expensive real estate, and might look for opportunities they understand. For my generation, that's definitely Bitcoin. And with Mr. Trump now re-elected, and the anti-crypto sentiment perhaps softening, banks and institutions may start offering custody services for Bitcoin. They might even offer a yield, similar to a dividend. This would bring more money flowing in than ever before. And if the U.S. adopts Bitcoin as a strategic reserve, that's a game changer at another level. If I was a little more courageous in my belief in my own intelligence or my own lack thereof, I would put everything into NASDAQ and tech stocks, but I see stocks as more conservative. Bitcoin is for sure the aggressive side of my investing, and that makes me feel balanced. And tying it all together, if Brics succeeds in building alternative payment systems and attracts more and more countries, we could see a world where the dollar is not the world's only reserve currency. That means it's essential to stay invested in global assets over time, because inflation isn't just hitting your groceries, it's driving up the prices of everything else too. Staying invested, that's what I'm doing. This is not some one-size-fits-all strategy, but for someone like myself, I think this makes sense. But I'd love to hear what you think in the comments below. As always, thanks for watching. Hit that like button if you enjoyed this video, subscribe if you haven't already, and I'll see you next week. Bye-bye.